Hi, good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. 7th of September. Um Markets have opened very strong. Well, actually, no, that's not right. They've opened weak, Japan, that is, early this morning on the back of a very poor US close last Friday. But everything is in the green as you see down here, mainly caused by or mainly led by the China markets. China markets have just come online about 20 minutes ago after a extended 4-day break last weekend. And right off the bat, we've seen a huge move, as much as about 5% up earlier this morning, trading a high of 9,750 over here on the A50s to a low of 9,000. So you're seeing a 700-point range, or close to 6-7%, or 5-6%. Now, clearly, everybody is being cheered by this up 6% or up 5% sort of mark. But considering the fracture that this market has seen or has had the last 2-3 months or so, this is still not good. It just shows you how unsettling or unsettled the markets are. Any volatility of a 5% up or down would bring about further volatility. And this is something which scares a lot of traders at this point in time, especially when things like policy changes are actually looking ahead at us. So we're not seeing. I mean, this clearly, or this whole green or series of green down here does not mean at all, that the worst is over, if you may. Look at the Nikkei, for example. It is up 230 points here on the Japan 225 cash futures that we have, or cash numbers that we have. But clearly, look at this range. It traded a low of 17,500. And is now trending in a high of 18,000. Again, a 500-point kind of swing. And these intraday swings are really wild and vicious, and it could come back to hurt you depending on where you are at any point in the game. So, what we have staring at us this morning was over the weekend we saw some officials from the Chinese government or Chinese central bank authorities come in to basically say that they think that the worst is over. But no central banker in the past has managed to successfully predict market direction in any big way. So it remains to be seen what sort of strength they have or what sort of influence they could have going forward. But clearly, with the US markets off tonight, Asian markets have, at least for today, taken the opportunity to actually go in to represent some sort of a position down here in this early trade. We have maintained, or today's morning note, we suggest that I think for everything to sort of look a bit clearer, we may probably have to see all these major markets, namely Japan, the DAX, the US indices of S&P mainly, perhaps test that low once again, hold that low that they hit late August, and maybe go from there. But clearly, there's lots of news and lots of event risk going forward. I mean, starting from, for example, tomorrow, we're going to see big numbers coming from well, tomorrow, big numbers coming from Japan in terms of the early read of the GDP, followed by Chinese trade data, which I think is very important and sets the tone to see whether early effects of the renminbi devaluation could come into play. Then obviously GDP in Europe again. Now the big lead on is going to be into September's Fed meeting in a couple of weeks' time. Stocks to look at. I just wanted to. I mean, we wrote something this morning about our favorite stock, Noble. Noble. I mean, the reason why I've got this into play is because of this. Basically, the consolidation here at this high or reasonably high level clearly suggests that we are seeing some stability. This down, or rather, let me just draw this. This may have represented a sort of a double bottom, and even more interestingly, this trend down. Okay, Noble is testing the higher end of the descending channel that we have seen. If this thing can punch through above, we may see a retest once more of this so-called 63 and a half level. So I mean, we brought up 2 points that will influence the stock price down here. On the positive side, rather on the negative side, I think a lot of it has really been known. The attacks by muddy waters, icebergs, in view of the balance sheet of the deteriorating balance sheet of the company, and also of the accounting practices that Noble has been accused of, has weighed on the stock. The CDS price has remained quite high, clearly suggesting that creditors of the company remain still skeptical and a bit worried down there. This could bring things down. If this comes down, we may see this test once more. If it breaks, we're going to see a very fast move down. On the other hand, though, positively, there's been some M&A plays where commodity companies are concerned in Singapore. In particular, Olam saw a big acquisition stake being purchased by Mitsubishi Corp a week ago. That has put the spotlight on some of these potential M&A plays on some of these commodity companies in Singapore. If Noble, as they had mentioned that they are talking to parties, purely speculation at this point in time, can lend this worry to short sellers, we may see a short squeeze. Any short squeeze and a break above this level could see the stock come up to test or retest at 63 and a half again once more. So you're going to see both opposing influences on the stock price, and it could set things off in quite a fast fashion. So I just want to pull this clearly because it was on our radar this morning, and it's something which possibly could be a stock in play. Meanwhile, I have down here the VIX. The VIX, despite all that we have seen, remains still in a position to actually push forward. Obviously, we need indications from the US market to be represented better here, and that will take probably another couple of days for them to show up with their Labor weekend break. Otherwise, it's still early days for this week, and it could be possibly a volatile week ahead. Thank you very much.